Hey guys, how are you? Welcome back to my channel. This is Trading Addict. In this video, I will talk about the recent rate of interest increase by the Bank of Canada, which means that Canada now has 4.50 policy rate, and this recent move by Bank of Canada's governor or the whole team has definitely put an additional pressure on the mortgage market, not only for the new buyers but also for those people who already have mortgage. And I think it is a challenging time for them, that how they will manage their payments now. I noticed that previously, because of these hikes, they were struggling to make their mortgage payments, but now after this I believe that we might hear some news in the economy that there are more foreclosures, there are more people who are not paying their bi-weekly payments, or who are not paying appropriate amount of bi-weekly or monthly payments as per their payment schedule. So I think this recent move, though it is a necessary way to improve economic problems or get rid of economic difficulties, but I think still it is very painful for those people who have to suffer the consequences of these policy implications or policy implementations. So now I believe that in the middle of 2023, I think we will see that there are more mortgage defaults, or there will be some unsettling news in regard to mortgage industry that we might hear in the middle or at the end of 2023, and many people will be unhappy because of this decision. Not a good time for people who are going through or who have mortgages, especially variable rate mortgages. Not a good time for those people who want to buy a house because of their expanding family. So it's better if they could wait, but it depends on family dynamic. I think it's not possible for so many people to wait and buy a property when the rate is down. Sometimes it is a necessity because you can't control your family dynamics, and if there is a new child in the family, then definitely you need a bigger space. But it's very difficult when rates are high, because you are paying more for your basic necessities now, which is extremely frustrating for people who have limited income. But I think things will improve, but we will have to see a tough phase. And Bank of Canada has said that they might conditionally pause the rate hikes, but they have said it depends on the data that they get from the economy. For example, the consumer price index, or consumer price inflation, I'm not sure what's that, or the full form of that. But I think if they see a decline in that, yes, there will be pause. But if there is heated job market, if there is continuous wage growth, then definitely we will see another rate hike when the Bank of Canada meet next time. So let's see what happens. But I think there is one important thing that I will do in regard to my finances, which is that I have a line of credit, and previously I thought I might close my line of credit, but now I'd better not close it for some time, because otherwise it would be very hard for me to get re-eligible for line of credit based on the higher rate of interest. So also, if you have your credit cards, your line of credits, or your some borrowing for emergency purposes, it's better to not to close those emergency funding sources. Otherwise, if you close that and you want to borrow again in the future, things might not be favorable. So for now, keep your existing emergency fund set up as it is until we see what happens in the economy, or we see another change from the Bank of Canada. Then we make a decision about that. So I think that's all. We will chat more in my next video.